Gang, can you hear me? Happy days. Listen. Bitcoin to 8K. Now some of you are probably thinking, what on earth is wrong with this guy? We've just had ourselves a significant move to the upside. Why is Tino talking about Bitcoin going to 8K? This is what you're going to get from this stream tonight, guys. And I hope you're all doing well this evening. I'm going to talk to the day traders. I'm going to talk to the holders. I'm going to try and get you to understand that the marketplace that we are in right now is heavily driven on data. It's not a trending market per se. It's based on data that is released regarding the US economy. Now, we've had a problem with inflation. Let's not shy away from that. Today, CPI data came out within line of expectations at 6.5%. Cool. Looks like inflation has cooled. The market reacts to it. Happy days. Bitcoin takes a nice move to the upside. Euro with that significant move up. Dixie takes a nosedive down to that 101 range itself. But people have always done this in the marketplace. They're not loyal. People will instantly say, you know what? That's it. I don't favor lower price. I favor higher price. The second that they get the chance to go long, they will. Because we are wired to consume. We are wired to buy. That's why when someone says this is a bull trap, they get scrutiny for it. Oh, what are you talking about, bro? Why are you going like, why are you saying bearish all the time? Why don't you see the upside potential? Half of YouTube was calling Bitcoin for 100K. Hasn't happened yet. Now, if we're going to go by the principle of the halving of Bitcoin, fine. Well, we're not there yet. We don't need to worry about that. But I'm still in line with my projection of Bitcoin going to 8K for a number of reasons. If we're in a macro-driven marketplace, the CPI data that came out today excludes food and energy. Guys, we have just had, or narrowly missed in Europe, an energy crisis. Now, the reason why they exclude food and energy, because food and energy is volatile. And the one problem that the Fed still has is the strong labor market. So if this labor market is so strong, given that unemployment claims came out today less than what they had projected, 216,000 unemployment claims was the projection, came in at 204. So even lower. What's going on? Less people are claiming benefit. More people are in work. The unemployment rate only last week came in at 3.5%. They projected 3.7. So what I'm saying to you is this, to have this in the back of your mind. Even though inflation has cooled and it's giving us the idea that the Fed may slow down on the interest rates, doesn't mean that they're going to stop increasing them. Word on the street says that they're looking at 25 basis points, but they threw in that little 50 basis points just to keep people satisfied. You see, there are traders in Wall Street that bet on the idea of whether or not the Fed's going to increase it by 50 basis points or 25 basis points. And they use that as a measure to try and get where the Fed is likely to go. Because ultimately, ladies and gentlemen, we won't know the data until the data comes out. You saw what happened today to Bitcoin when the data came out. That's why I was screaming to you throughout these last few days. Make sure you pay yourself, because most people that trade in cryptocurrency have on use 100x leverage and they can get shaken out. Doesn't make me a bearish person if I'm saying to you to pay yourself. You're in a game which 95% of people lose. And I'm telling you to pay yourself if you got profits. Happy days. No one went broke taking a profit. Now, like I said to you earlier on, the inflation rate is still high. Ain't going to force the Fed to stop increasing interest rates. That's a completely different story. Fed pivot. That's what the problem is. When the Fed decides to say, okay, no more increases. Let's start decreasing. It's a change in fiscal policy. So the market naturally reacts to that. But we're going to go over to the charts and we're going to break it all down to why I still believe Bitcoin's going to go to 8K. And it's not because I have a view of price. It has to be at 8K. I'm going on the idea of the future volatility. The market is still fragile. one day of happy days on news is a problem. We need to see consecutive months and weeks of news coming in to suggest that labor market is still a problem. So if you are new to the channel, stick with me on this one. Be sure to like and subscribe. Mad love to all my pattern watchers. Let's break this story down. Here we go. So, looking at Bitcoin's price action. Now, this is for my holders. So if you are a holder of Bitcoin, sit tight. All right? So check this out. Go to the higher time frame on Bitcoin, right? We've seen that Bitcoin has this tendency to spike up to come back down. Now, we know that those who trade Bitcoin use it on leverage, all right? But for the holder's going to base it just off the idea of price and his DCA strategy at the same time, all right? Has Bitcoin gone anywhere that we aren't surprised about? No. Now, word on the street is, or on Twitter, should I say, we're looking at 20K Bitcoin. Cool. It's key psychological area for Bitcoin, 20K right there. It would only be go back into the vector candle region. So would you be surprised if it goes there? No. But it's a macro-driven environment. Tomorrow, something could come out that suggests that the Fed is going to maintain 50 basis points and it's just going to keep increasing interest rates. You don't know what can change. That could send Bitcoin down. Now, Bitcoin has been consolidating and a lot of pressure has been building inside of this zone. Some of my guys with the pattern watchers would understand that, well, let's start again. They would understand that this could be a nice little W formation. What are you expecting? A retrace. You want the proof of the move. Now, for my day traders, I'm going to be explaining a couple of day trading strategies that you can utilize as to whether or not, if you do have positions on already, how to manage them when this sort of situation happens. I'm going on the idea that the trader who's taken advantage of this play right here is in profit. Okay? But I'll get to that in a second. So my holder, he's looking at price and he's seeing it go up. Does he feel like he's missed out? You should only feel like you've missed out once Bitcoin has broken this key area. And the key area would be the 21,000 region, because we would have surpassed the psychological area of 20K. All right? When Bitcoin was at 20K, given that this was Bitcoin's last high back in the day before it actually collapsed, all right? Investors would step in at this point. So, with that being said, 21,500 would be a point where Bitcoin would have shown proof of its move to the upside, going into higher time frames on the daily. It's the first time Bitcoin's managed to get over the 50 EMA and stay above it in the same session. All right? It's been a while since that's happened. Last time that happened was back in October, and then it collapsed from there, come back into it, come back down, and now it's trading above it. Volume is rising, but not as much as it should. Now, I'm not pessimistic. I'm being straight with you. Just look at the volume bar down below. Is that a lot of volume? Well, to the last time when it came up just before it dropped, that volume bar is right there. If you look, you can see. Is it the same amount of volume? No, it's lower. Fractionally lower. I don't even know what I said then. Fractionally lower. That's the key thing. So, from a holder's perspective, is now a time to start adding to your bag of Bitcoin. Well, I'm about to tell you why I think Bitcoin's going to go to 8K. Don't take my advice. I'm speaking on what I believe volatility will look like in the future. So that takes me over to this good old volatility index. The volatility index is the measure of the ratio between the puts and the calls. Now, those are options. Now, if you favor puts, that means you want lower prices. If you favor calls, you want higher prices. Now, this volatility index is based on the put-call ratio of the S&P. So if more people are favoring lower prices in the S&P, naturally, this bad boy continues to go lower. Okay? But when you open a position in puts, you are leaving options behind, or should I say, you are leaving your liquidity exposed, because they can simply return price back up and hit those points to get you out of the money as such. All right? Now, the volatility index is great at determining the future of volatility over the next 30 days. Now, I'm not saying Bitcoin's going to go to 8K in 30 days. That's not what I'm saying. But it's coming into a point where normally it likes to reverse. If you notice in the chart, you can see right here, guys, if you just mark across below the 20K range, it's always at that point where it makes a move. When the volatility index moves up, assets across the board go down. And when it gets to and around the 30 zone, that is where fear is at its highest point. So the old age saying in Wall Street is, when it's above 30 or when it's high, you buy. When it's low, you hold. But in this instance, you can exploit shorting opportunities. If the volatility index is going all the way down to 19, and when it's below 20, it will be deemed as a potential point for price to reverse for assets. That means Bitcoin could reverse from this point that it's at. That would imply that the volatility index would then shoot all the way back up. The Black Swan event. Has it actually happened yet? Well, let's just go over here to the S&P. The S&P itself seems to be holding very well at around the 800 EMA. Now, for my technical traders that approach trading in the technical wisdoms that would say lower highs are being established right here, you would be in that agreement that the S&P is in a downward swing. Some of you guys would probably draw these channels like this and anticipate that price is going to break this channel at some point. What I want you to understand is this movement in the marketplace is macro driven, all right? Go back to the monthly time frame on the S&P and look at the subprime mortgage crisis back in 2007, 2008, all right? That is a drop, all right? Coronavirus, drop, shift out. Look at where we are right now. If today's data suggests that inflation is cooling and the Fed's going to slow things down, but the Fed has the employment market, which is still a bit stubborn, which could lead inflation to spike up because anything can happen from now until the next reading. Lots of people could go out shopping. We're out of winter. People are going to start going out, enjoying themselves, spending the mullah. That could lead inflation to go back up. Michael Burry did say it. It might come in as a slow reading, but we might get an inflation spike. That will rock the marketplace. S&P needs to break easily above the 4,300 zone for us to convince ourselves that it's going to continue higher. They're talking about 6K. In the next bull run, 6K for the S&P, but we haven't corrected enough for that to happen. Go over to Tesla. I'll get back to Bitcoin, don't worry. I'm building my story as to why. Tesla's recovered most of the vector candles right here, and we've got more vector candles down here. Now, why am I looking at Tesla? Because Tesla usually leads the S&P. If people start dumping on Tesla, the S&P and the rest of the stock market usually follows, which is why Bitcoin would do the same. Now, Bitcoin is up 5% for the day, near enough. Now, Bitcoin on the monthly time frame, I'm going into my day traders in a second. Bitcoin on the monthly time frame is doing good, but it's not really going anywhere. Look, just look at the candlestick. How can you convince yourself this is a bullish play when it can't even get above the last 2 months high? It's not even above the previous month's high as well, or the close of that. Doesn't make sense. It's a macro-driven environment. All I'm saying to you is to be careful. Go into the weekly time frame of Bitcoin. We got one more zone down at 13,890. And then the final zone at 8K. Let me ask you a question, chat. Is 8K more achievable or is 70K Bitcoin more achievable? Within the scope of the chart, what do you think is closer? It makes sense numerically. 8K is closer than what 70K is. So why do people have the idea that Bitcoin from this point right now can go to 100K or go even higher? Hasn't broken any structure. It's just recovering 50% of the vector candle. Look, take your little Fibonacci's, drop down towards that vector, smack, recovered 50% of the vector candle. Not even near the 50 EMA or the 200 EMA on the weekly. Like, are we at key turning points in the chart? No. I'm all favorable for Bitcoin to go up, guys, but this is what I've got right now. No vector candles coming in. Where's the volume? It's disappearing on the weekly. So if you're a holder and you're trying to work out if Bitcoin can go higher, or you want to buy Bitcoin now, wait for a bit more information. Because what can happen to Bitcoin now is, from this point, it could continue up, recover this vector candle, and then drop back down again. How would you feel about that? You won't be too happy. So, if Bitcoin can break this structure of the 21,500, naturally you're going to see a rise. You're going to see a retrace back into it, then a continuation. Not being funny, but if that were to happen, and you got in at 21,500, and Bitcoin shoots all the way up to 27, come on, man. That's a nice little play right there. But are you in that situation yet? No. It's not even there. Until it gets there, then we'll start talking about it. Until Bitcoin shows me otherwise, then fine. Now for my day traders. 1 hour time frame. I said today to you guys, even yesterday, said it to the patrons, I said it all the time. If you are in longs, day traders, if you are in longs and price is above the 50 EMA and it hasn't shown signs to break down beyond the 50 EMA, so that means this purple line right here, if it hasn't broken beyond the 50 EMA, there's no reason for you to close your longs. But that doesn't mean you allow your long, if you went long from this point right here at the daily open and your longs all the way up here in profit, you've got yourself a bit of a situation. Why? Because price would naturally come back and test some of these zones, okay? Because it's expanded away from the mean. It's come away from the moving average. Even all the Fibonacci traders know price will need to retrace back towards the 50 zone on any move. And they usually see that happening, okay? So principally, if we are going to use a Fibonacci, for example, from this low all the way to this high, you would expect Bitcoin to retrace back down to the 18,500 zone. So if you're in profit right now and you're at $2,000 profit, well, when it goes down to that 0.5, you're down to $1,000 profit, you're going to be knocking your head thinking, well, you're a bit of a mug, bro. Why have I just given that money away? You'll close the trade and then you'll get in again at this point thinking it's going to continue higher. Then Bitcoin will come back up again, resistance, and then come all the way back down. But it's going to keep you in the trade because you'll believe that that 50 point is going to hold. So the only way you can get around this madness of whether or not it's going to keep going in your favor is to understand the momentum. This is why we use the hybrid system. And if you haven't done so already, go to the Traders Reality website, go to the Start Here tab and download the hybrid system free of charge. Just go to the Discord, download the indicators. It's all free of charge. And you want to learn more about the hybrid and projections, check out the Patreon. Now, listen, Bitcoin right now is holding above the 5 and 13 EMA. And if you've been with me for a while, you'll know that when Ethereum held above the 5 and 13 EMA, once it broke that 1800 zone, take a breath, bro. It didn't stop. But we didn't have the problem of macros back then. All right? The S&P was just moving up. Everything was going up, and so was crypto. We didn't have to worry about inflation. Interest rates were at 0.25%. Only in 2022, interest rates were increased 7 times by the Fed, brother. What's going on there? And people had gone bullish all of a sudden. When's the impact of 7 increases in interest rates going to take its toll? Layoffs have been happening. Goldman Sachs, BlackRock, cutting 500 people. BlackRock. Come on, bro. You got money all day. You got everything. Why are you cutting your workforce? What's the point in that? Because you want to line the profit margins? Bro, you own everything. Why would you want to cut back? Doesn't make sense. But what I'm saying to you, we got Bank of America's earnings tomorrow. We got JP Morgan tomorrow. Earnings announcements. We've got options expiring tomorrow. Is this move in preparation for that? So, my day traders, if you are currently in longs, if Bitcoin invalidates the 5 and 13 EMA, which is the yellow line and the red line right here, and closes below it, that would suggest that a move to the downside could sustain at least back into this zone. Because Bitcoin is beyond its weekly range. It's beyond its daily range. All right? This is what it is. The daily range is right here. Because price has been compressed. You saw what they did today, guys. Look at that stop run right there. Shaking out all the traders. Vector candle recovery. Test the daily open. Bounce to the upside. Treacherous behavior. Now, I hope chat is doing well tonight. We're going to start navigating across other assets. Haven't done this in a little while, but I want you to give me your coins or any assets you want me to quickly go through. Yeah? So chat, I'm going to get the party started by looking at Ethereum. And I'm going to give you a projection, a breakdown of what I think is going to happen. But remember, give me some altcoins, all right? Some of the coins that you guys might be trading. And I'll start giving you a little bit of an insight on how to really trade altcoins based on their volatility. I don't care about the price. I care about the volatility that is to come. All right? Here we go. Firstly, Ethereum. Ethereum like Bitcoin, all right? But Ethereum moves a little bit faster. Now, you see Ethereum, you can see on the daily open, it broke the daily open, traded below it. Then you had the US Brink session. And what do we always say about the Brink session, ladies and gentlemen? Always wait till 3 p.m. for the move. Bang, 3 p.m., held the low, shift out to the upside, okay? Next, let's have a look at Quant. I actually did a projection on Quant. Let's just have a look at Quant for a second. Where is that? Quant Tetherus, here we go. Now, Quant has been climbing up pretty well. All right. Had a nice little move with Quant to the upside. It's still currently trading, but closely to the 50 EMA. All right. Now, Quant is showing this behavior because it is quite an expensive coin. It's showing this controlled movement. Okay. When you see that controlled movement, it suggests to you that they are in an accumulation phase, but it's quite a choppy coin. Look left and look to see if they're taking out any key points. The last zone that you could be seeing Quant get to, if this move sustains itself, because we're going into Friday tomorrow, guys, and you know what Friday's about. We've got the preliminary. Here we go. Preliminary consumer sentiment tomorrow. And if this comes out above 50 or even stronger than 60, the Fed knows that the employment market is booming and it's hot. That's going to have an impact on inflation. Even though, look, Bloomberg even said it. None of that means, of course, the Fed will soon declare victory over inflation. Resilient consumer demand, particularly for services, combined with a tight labor market, is still a significant threat to prices. And that is what can lead inflation to spike up. That's why I'm saying the market is based on macros. Good news today might not be good news tomorrow. That's the key thing. All right? So keep an eye out on Quant on the 125 on the assumption that it sustains itself above the 50 EMA. But given with today's price action, it hasn't really moved much. Next coin, let's have a look what you got for me. Solana. Here we go. Nah, I want Sol on Binance. Here we go. So Solana, given with what happened today, okay, $16. We also had a projection on Solana. It's stabilized and come back into this previous vector candle region right here, okay? So they've come up and we've got 3 consecutive moves. We would assume this would be the low, the rise level 1, rise level 2, rise level 3 peak formation. That could be the case going into tomorrow. But remember, crypto trades over the weekend. So you've always got to do this. When you come to the chart, always make sure you mark off the vector candles, just so that you're not blinded by the idea of price going higher and, you know, keeping aware of where it could potentially go to the downside. All right. Give me another coin. Solana is SBF money. Yeah, let's have a look at Zil. Zil USDT. Here we go. Zilica. All right, here we go. Now, listen. Most of you that may trade these altcoins that are priced cheaply, be very careful. Low volume, not that much liquidity, prone to these fast moves up, and even more prone to the move back down. This right here is exit liquidity. And I'm starting to hear that a lot, but we've been spacking out this sentence for quite some time. My pattern watchers will know. These are the people that have been sold into. All right? When you get these big moves like this, ladies and gentlemen, what you've got to be mindful of is the vector candles on lightly traded coins are usually going to get recovered sooner rather than later. It's not like Bitcoin. Bitcoin takes a while to get the vector candles recovered because it's a largely traded coin. It's the only coin that has the most amount of volume, and even that's going down. If we go over to the high block for a second and look at the liquidity that they've been eating over the past few days, the shorts, $19.3 billion worth of liquidity taken. And again, $16.297 billion liquidity taken. And then today we had $18.7 billion worth of short liquidations. But then we look at the chart again and we see that my longs, or the longs of all the traders, not on this chart. Let's go to the 12-hour. The 12-hour chart is suggesting, thoughts on Polygon and GALA, give me a second. The 12-hour chart is suggesting that everyone and all the moon boys have stepped in. No discredit to the moon boys. They are the most optimistical people on earth, and I got mad love for the moon boy, but the moon boy needs to pay himself, bruv. All right? You can only stay on the moon if you got the cash plus to say it, to stay on it. For fuck's sake, Tino. You know what I'm saying? The moon boy can only stay a moon boy if he keeps paying himself. That's the only way he can exist. All right? That's how it works. Just pay yourselves. But just look, the longs have stepped back in again. The longer that price stays in a sideways range, the more that this liquidity is starting to build up. Do you see what's going on? The shorts have been eaten alive. They've been taken. Now the longs need to come back in. So Mr. Market Maker needs to move price to a point where he's going to grab the interest. Next coin, Cosmos. Here we go. Cosmos. Atom. Right. Atom. Climbing up. Altcoin again. Now listen. Atom. Here's the trick. Let me show you. This is the 50 EMA. All right. If price is doing this, up and down, holding the 50 EMA, it's trending away from it. All right. Cool. Now, what if you've got this? 50 EMA. Price has done this. Spike and then shift out. This gap right here is what you trade. That's the gap, because that's the principle of the mean, because price has gone to an extreme zone of interest. That's where you see the vector candles appearing, where they trap the traders, right? At the highest point. You trade into or fade into that zone. If the move's going to continue, then price will consolidate at the 50 and bounce away from it. You set yourself a trade and you put your entry here, happy days, and you would say that your stop's all the way down here, depending on the leverage that you use and the capital that you're going to invest. And you execute that and test it over a sample size of trades. You're not going to get it right the first time. You might get it right the second and the third time, lose on the fourth time. But the time that you lose on the fourth time is not going to take away the profits that you earn on the second and the third. That's trading, simple as. You're looking for movement. Go over to Atom, you can see what it's doing. Deviation away from the 50 EMA, back into it. Consolidate, holding 50, bang, all the way up again. Come back down, come away from it. Now what are we waiting for? Come back down to the 50 to test the idea again to move up. Simple. And you know what? Trading is simple, but we complicate it because the amount of money that we use gets us all messed up in our minds as to whether we hold the trade or not. Then we get rid of the trade because we can't handle the loss. We don't give it the flexibility to move. And when you're trading altcoins, ladies and gentlemen, man, altcoins are absolute, they're just madness, up and down. If you can absorb that volatility, happy days. Make sure you're using light leverage. Stay in the game of trading. That way you're going to survive. Next. LTC Litecoin. What time is it? How many people in here? 1,500 people, and we only have 300 likes or so. What's going on, pattern watchers? Come on, man. Where's the love, ladies and gentlemen? If you are new passing through, be sure to like and subscribe. I've got a couple of more things I'm going to show you in a second. Now, I'm going to go into a bit of Forex in a sec and the Dixie, which is important. So, again, Litecoin holding out. You'll notice that most coins that are priced that are pretty much expensive, like Litecoin, are doing the same thing, holding the 50 EMA. But remember, we're going into options expiry. We're going into the Bank of America, JP Morgan, Wells Fargo, and Wells Fargo has decided to come away from the mortgage division. What's going on there? What is going on there? If Wells Fargo's coming away from that, given that the UK and the US are closely tied with mortgage rates and what have you, all right? We only said a couple of days ago, 800,000 homes that have got mortgages, those prices have now doubled. Those rents, those mortgages have all doubled. That's only calling for defaults. That's only calling for people to lose their homes. That's the crap thing about it. So if Wells Fargo's coming away from that industry, that means it's trying to hedge itself and come away from that risk. That's not good. You don't want to come away, the biggest player in the game nearly, coming away from the main sector. Nah, man, doesn't make sense. Do you see what I mean about a macro-driven environment? Yeah? Litecoin, same thing as Cosmos, holding that 50 EMA. The second it breaches the 50, because you can see it has this sequence of breaking down, coming back up. An invalidation of this structure right here at 79 would then lead Litecoin lower, because this is what would happen. Price would then go up and down inside of this zone. If it can't break this structure up here, it will come down, tap this range, come back up into it, form a little high right here to come down again. And there you have the structure, or the tattoo pattern that we always follow in this channel. The rise, the retrace, the continuation to the upside, and then, of course, the drop, the retrace, continuation to the downside. I challenge you to go and find this structure in the charts every single day. That's all you need to do. Find this structure. You see price move away from the 50 EMA, comes back into it. See consolidation, you open half a position here. If it manages to break away from this point, then you're going into the idea of volatility, shift out to the upside, add a position right there. Pay yourselves once it deviates again away from the 50 EMA. Give me another coin so we can try and find that system. Here we go. One right there. Here we go. Look at this. There's that structure. Rise, retrace, continuation to the upside. Yeah, I'm talking in hindsight, but go back in the charts and try and find this pattern, and then you'll see price do exactly the same thing. That's the truth of the pattern. Next, OKB. Let's have a look. OKB, USD, Tether. Okay, not really. Oh God, give me a coin. Tether coin next. Okay, look, a light coin like that. I mean, $28 a coin. You can see it's prone to spikes. I don't really want to entertain coins like this. All right, give me another one. Cadena. Actually, no. Let's look at ADA. For my ADA guys, where's my ADA gang? Cardano. Who likes Cardano? Now, look, ADA's doing something interesting. ADA's doing what I would want Bitcoin to do. But Bitcoin's all the way stuck at this high right now. Okay? So go back into ADA. We've got the consolidation at the 50 EMA. What do you think could be forming from here? Now, there's two scenarios that you've got to be aware of, right? We've already had an extended move to the upside. Look left, and ADA's taken the previous vector candles and stuck at this point right here. Look at the precision right there. Come away from that last point that it sold away from, which is at the 0.34 mark. Now, hypothetically, if this move sustains itself into the weekend, ADA, by the principle of the pattern, will do the following. Rise, the retrace, continuation to the upside. Now, it's inside of this zone where you need to start paying attention. You're seeing them pushing price up, but price isn't really going up. It seems that it pushes it up, aggressively comes down. Pushes up, aggressively comes down. Now, some of you will be looking at this thinking, but what if this is a structural M formation getting ready to come back down into the imbalance in the chart? What if that's going to happen across the board? And with altcoins, they usually stick to structures pretty well because they're lightly traded, okay? So in other words, altcoins can move quicker to and from zones. You've got an altcoin right now. Chat, where's my altcoin boss list right here? Here we go. Let's find the biggest moving coin based on what I've got in front of me. JASMY coin. Look at this bad boy. It just keeps going up, okay? This is what you look for, an altcoin that's making these moves. If you profile JASMY coin, every time it makes a bold move up, it works by a principle of 3. 1, 2, 3, drop. 1, 2, 3, drop. Okay, then. So the principle says 1, 2, 3, drop. Because that's the profile of the coin. Okay? Give me another coin that's made a nice big move. Forgive me. My days, what's going on? I ain't got no water here. Right, GALA. Let's have a look at GALA. Actually, GALA. That's what I want to look at. GALA. Here we go. Now, GALA itself, pretty bold move, doing the same thing as ADA, giving me more information. Now, look at this big move to the upside on this coin right here. Look at that huge candle, and it went nowhere. These are the clues, all right? These are the big clues. Bitcoin, bro, Bitcoin people. Oh, okay, I thought something was happening. These are the clues to suggest to you that they're trying to mark price up above a key zone. Right now, it's sitting at the 0.04 mark. It made its way up to the 50 cent, well, 5 cent zone as such. Look at the volume, yeah? Down here, that was that big move. This volume bar right here. Who's this? Crypto Lifer. Mad love to you, Crypto Lifer, bro. How you been, man? It's been a while. It's been a while, brother. Thank you so much for that, bro. You didn't have to, man. Look at the volume down here, yeah? Great. Nice volume. Big pump by GALA. Now, let's just go over to the other volume candles right here. These are the manipulative candles. What did we just say a few moments ago about JASMY coin? This is the thing about altcoins. Look how they move away from the 50 EMA and they come back into it. Now, previously, I anticipated GALA to come down from this point, but what they did instead was they came up, they retraced to the 50, bang, they shifted back out again. Now, you're never going to get the almanac of trading. It's all about getting your mind prepared and trained to see this sort of behavior happening. All right? That's how it works. Let's get into a little bit of Forex, man. Now, it's important you follow Forex. All right? EURUSD, aligned with the dominance of the dollar. Remember, Bitcoin can only go up if this bad boy goes down. The problem that I've got, JP Morgan, all right, Goldman Sachs, you've got some economists that are Nobel Prize winners, and they're all saying, right, that people are really favoring more bonds than they are the stocks, because usually institutional investors split their portfolios, 60% stocks, 40% bonds, but that's flipped on its back now, and there's now more bonds in portfolios than there is stocks. That kind of suggests something. JP Morgan and Goldman Sachs talking about being in cash. Guys, I'm giving you information that the fat cats put out there that people respond to. I'm trying to get you to understand the future of potential volatility, which is why I'm saying Bitcoin 8K is more than a likely scenario than 100K from the current point. We break over 22K, we can have a conversation. But until that point happens, I've got nothing else to look for other than 8K. Now, the dominance of the dollar has broken key points, has entered oversold territories, net dollar longs. So in other words, now that the CPI data has come back and we've seen that it's slowing down, but the Fed still sees that the employment market is still strong and that inflation is still prone to changes. So we could get a spike. Guys are getting in dollar, might want to step in soon enough. Remember what we said about the volatility index. When that bad boy is approaching these key zones, it's approaching turning points. Below 20 is a significant point. Next is gold. My guy went all the way up today, nearly tapped out, closed above that 1902, but came back down again. 1902 for an ounce of gold, bruv. This bad boy's doing well. Yeah? We've still got vector candles for gold to the upside. We're not going to dismiss that bad boy because gold is a safe haven. And as long as gold keeps going up, that means Bitcoin can keep going up. But Bitcoin's disparity with gold has not been consistent. Gold was moving up way before Bitcoin was moving up. Now remember, Bitcoin follows the S&P. So if the S&P comes down, Bitcoin's going down. Remember that. Because it's the pressure of stocks getting rid of assets or institutional investors getting rid of assets. All right? What else have you got for me? No problem. No problem. Give me another NIR. Let's have a look at NIR. One more. And then I'm going to quickly do a little bit of Forex and then happy days. Right. NIR. Oh, this is on the daily. Right. Again, day traders. What have we got? Tap 50, move away. Quite a choppy coin. Again, altcoins. You've got to have balls of steel to sit through volatility in altcoins. I don't like that. I don't like these wicks and this madness. But it's not really, in my opinion, it's not really from looking at it, it's a very volatile coin. All right? Doesn't really consolidate much, but when it moves, it really moves. Okay? So just be mindful with NIR. We've had these consecutive moves up. You can see the vectors are coming in and the volume's there, but it's not really gaining much ground. All right? Could this be the point that they all decide to turn from? Deviation away from the 50, but they could continue up because we've got vectors inside of these zones all the way at the $1.90 zone going into the $2 zone. So really, we need to see price. Ideally, I want to see it break down first. That's the narrative. And then come up. That's what you're looking for across the board, ladies and gentlemen. Okay? Polygon. I need to get Polygon for a second. My guy asked me for that. Here we go. Polygon. Right. 0.9. What was the other coin, bro? Ah, man. Polygon. Look, you'll find that most altcoins are doing the same thing. Okay? They're all moving away from the 50. Lots of volumes come into this, but is it lots of volume? 2 million, that's nothing. But for Polygon, it's quite a lot. Look left and you see it's coming back into the vector candle region. Zoom in. Happy days. We've got vector candle recovery actively working the vector candle. The last time it went to this point in terms of a structure, that's where it sold off from. Okay, so we're now going to see if the same interest applies over here right now at 0.91. So what you're waiting for is consolidation. Okay, cool. Euro, same story. Dollar yen. Dollar yen seems to be stabilizing inside of this area. Not too keen on it, although dollar yen has got a lot of work to do to get back up. And if it does break this structure at 126, then it's going to be another story, ladies and gentlemen. ALGO. You get ALGO up. Clean. Look, this is the definition of a clean trading coin. Okay? No worries, Royal Nerve. What's good, Royal, man? How you been, bruv? Been a long time. Look at ALGO, how it trades. Beautiful. Rise, retrace. There's what we've just been speaking about. Rise, retrace, continuation. Okay? Your goal as traders, as holders, as whatever you are, you're just looking for the moment that it moves away from the norm. That's the secret sauce. Because the only way it can move from the norm, and that is the norm right here, this 50 EMA, okay? If it moves away from that, you are preparing for it to come back and test it. Go back in the chart and tell me when it doesn't do it, and then I'll quit trading. Simple as. Look, it does it every time. Deviation away from the 50 EMA comes back into it, goes to the 800, then disrespects it and comes away from it. To simplify your trading, ladies and gentlemen, all you need to do is wait for the moment. So you wake up tomorrow morning and go to the London session or the London Open and you see Bitcoin has made a move away from the 50 EMA on the 15-minute time frame. You've missed the move to the upside, so what you're waiting for? You're waiting for the point where it starts to come back down again because what's going on inside of this zone? There are guys who are currently long inside of this area. They went 100x long on Bitcoin and they're keeping their money there. Mr. Market Maker brings it back down into that zone to eat that liquidity so that he can take profits on their margin because he's hitting their stop losses. When he gets back into this zone right here, that's when you start considering, yeah, you know what, I'm going to try and run a couple of longs from here. I'm going to enter at this point here, and then I'm going to set my stop down here and sit back and wait. There's nothing more you can do. Nothing else. The mystery of trading is what is the way we make it mysterious. We put one indicator on, we put another indicator on, and then we think, oh, it's challenging that one. No, it could be this one. Let me find out what Twitter's saying. Oh, they're crazy long over there. Oh, I'm going to go on that because by the principle of the masses, I'm going to think that if they're all long, I should be long. Nah, man. It's just you and the chart. Back to the 8K principle, guys. Look. I believe that volatility in the near future is going to favor lower prices. Jokes aside, and yeah, you know what? Clickbait and whatnot. I've got your attention, I hope. But the idea is to get you to understand why lower prices, because of the marketplace that we are in, is what I'm looking at. That's all I've got right now. There's nothing to suggest to me that the market is turning bullish. Talk about it as much as you want. Until I start seeing the money coming in, then I'm going to make that belief. Right now, across the board, by the principle of volatility index, there's lots of puts out there, and people are favoring lower prices. But those puts could naturally get their stops hit and taken. Who's my guy? Near bangs. What's that? I did near for you, bro. Forgive me. But all I'm trying to get across to you guys is just don't look for price points. Don't look for anyone's opinion. Don't even consider my opinion. I'm being straight with you because I see the charts differently. You guys see the charts differently. But I'm telling you a way to just grab the idea of if volatility is going to work up or down. That's all you care about because once your money's in and you've made a profit, you don't care about what's happened next. You see what I'm saying? If you are new to the channel, ladies and gentlemen, mad love and respect. Be sure to like and subscribe. Get the indicators. Go to the Traders Reality website. It's pinned to the top of the chat. you want to learn more about these strategies, get yourself over the Patreon community and we can have a conversation over there. Mad love and respect to every single one of you, and I'll be checking in with you all tomorrow. Trade safely, gang. Peace.